and welcome to the Closing Beat, everybody. Happy Thursday to you. How you doing out there? All is good? Hope you're having a great day. Welcome. Thanks for watching here with us. By the way, tonight we got Wine and Wealth for our clients. Every Thursday we do a class for clients. Tonight we're going to talk about really cool kind of a flow chart we put together where will you get a deduction for your IRA contributions? There's a lot of little stinking rules in there. So we've essentially oversimplified the whole thing. We're going to go through it and then we'll post that in the portal for you so you can have that as a reference, because it really sucks to get, making IRA contributions, come to find out you made too much, you didn't file right, you're not filing the right status, or your life changed, you didn't tell me. So we're going to go over that here tonight. As far as the stock market goes, sleepy, calm, boring, sort of summertime volume. It feels like we're getting into the mix of it. The weather's changed. We're all moving slower. The market's moving slower. Very normal, right? So there's nothing odd about what's happening here. It's actually very normal. If we look at the charts, we got a mixed day, actually. No real catalyst. There's nothing to really move the needle. Sadly, the only real news was that the ship, the submarine thing that they found the debris, I guess. But in the financial world, not a lot, right? So we had Powell talking, but he kind of came out with his fireworks yesterday. Not a whole lot there today. Bonds had another good move today, but just a wild ride over in the bond market lately. If you look, we've got the NASDAQ and the S&P, the only things that ended up positive on the day. The NASDAQ was higher, basically just due to Amazon, Tesla, Apple, Microsoft. You can see a few of them there. Just another strong move. And remember, those make up the majority of what you see performance-wise inside of the NASDAQ. In fact, all of the gains today could be attributed to just those four stocks. There was nothing really that took away from the NASDAQ, though I won't discount the NASDAQ rally there. If you want to look on the downside here, we got the Dow pulling back inside of the, hopefully not back inside of this sideways and choppy range there if you're a Dow investor. And the Russell was the other one that pulled back. I like that. You got your small caps pulling back nicely about that halfway point. So a lot of people look at their first line of being excited to get into small caps would be right about that halfway point. So a little bit more to go. And I mean halfway from the low to the high. It's where you could kind of say the glass is not necessarily half full, half empty, but it's better than buying a glass that's half full. So you tend to get a little bit of extra volume right in there. We'll wait and see if that happens, of course. There. Now, the S&P, that was higher just a little bit here today. It's looking for the next leaders. The top 7 stocks that we've been talking about, they've done their part. They're not necessarily tired, but they're getting tired running up that hill there. Sector performance overall shows that there's not much outperforming in the short term. This is a chart that I like to share with you guys where we look at the outperformance of each individual sector relative to the S&P. So if the line's going up, we're outperforming. Line's going down, we're underperforming the market. As you look around, consumer discretionary and tech, really, that's it. In the ultra short term, even communication services pulling back in here. Basically, everything is lagging into that summertime slowdown feeling. But other than that, we have tech, communication services a little bit, and then consumer discretionary lifting everything up. So that's all you got. We have we have a very narrow market rally here. And, unfortunately, that's how it kind of goes at the moment. As far as the S&P is concerned, this rally, this real narrow kind of rally, for those of you that are spreadsheet nerds, I'm going to hop on over here and take a look to show you that it's not as bad as it was, right? So here's every sector broken down on the screen for you, makes up 100% of the S&P. And then we put their weighting here so you could see. The tech sector and consumer discretionary, we just talked about that moving a little bit higher. Well, they're the best performers over the last week. They also happen to be some of the best performers over the longer time periods there. So color coding this, we could see that the best performers in the midterm and long term are the best performers over the week. Down here at the bottom, the worst performers continue to be the worst performers. However, it's not so bad actually, because you have this middle area here that's at least moving higher. It's not knocking your socks off or anything, but at least it's moving higher relative to what it has done. So that's a little sign of hope there, but you could see that the top 2 sectors here basically make up 40% of the S&P there, and they're at the top. That's where everybody wants to be at the moment. So we'll see. We'll see. We'll see. We'll see. Okay. What are we going to talk about here? go on over here back to the charts. So S&P, obviously, nice little rally, nice little pullback here in the short term. That's fine, right? So we're at least kind of heading in the right direction there. As far as those of you that want to pull back, if you want to pull back, you know, you got your fingers crossed, and that's essentially where we're at. Okay. Now, remember, if you remember yesterday, we were talking about hedging. The wealth management industry talks about how now's the time to hedge. We talked about we talked about overvaluation. We talked about how cheap it was to actually purchase options if you wanted to use that as a hedge, almost as cheap as it's ever been. Well, part of the reason for that is that if you look at the how do you say it? If you look at the percentage of short interest by market cap, right, in the S&P. So 1.8% of the entire value of the S&P is currently short. And that's not a horrible thing. However, that's a recent high. At least in the last year, we've never seen that. Why do we see that at the beginning of a new bull market, right? Well, we see that because everybody knows, everybody's looking, that they say, well, these top stocks, your Amazons, Microsofts and everything, they've done the heavy lifting, they're doing the heavy lifting, but they can't do that forever. And if everything else doesn't cooperate, you have a recipe for a market that will continue to pull back. Pretty cool. Hey, you want to see something pretty cool? This will blow you away. This will just blow you away here. All right. Every now and then we pick on the Waltons, because every now and then I get an email from somebody that says, oh no, you know, the heirs of the Walton or Walmart family there are selling out their stock. Sam Robeson and Rob, I think, is the other guy. And they're like, oh no, you know, they're selling. Something's wrong. No, they just sell a lot, actually. So just for fun, let's take a look at something here. Cody put this together for me. Here is the actual transactions from just one of the Waltons so far year to date. I'm not making this up. 122 million. Let's call it 123 million. Started on February 22nd. We didn't even put the numbers on all of them because it turns into a hot mess. 162 million, 214 million, 275 million. Does it start seeming insignificant to you at some point? Like you just can't even wrap your head around it? This is the true sign of wealth. So far, year to date, Mr. Walton here has sold a total of $3.39 billion in Walmart stock. And that's not abnormal. They just do that. They're just cranking them out there. So, holy cow, we were looking at that today. And I'm like, you can't just spot me $100 or something? You know what I mean? Like, oh my gosh, imagine the amount of money. Just blows your mind away. That is truly incredible. And by the way, like I said, that's only year to date. That's through June 16th. Just think about that. Here we are, just doing our thing, you know, trying to, you know, make a little money and grow our dough a little bit. And these guys out there with that kind of money, obviously they're not spending it all. There's very strategic reasons they're doing that. But holy cow, incredible. All right, let's take a look at Ford, one of the stocks in the news here today. Actually, there it goes. So we got Ford up on the screen there. They're getting a $9 billion government loan to build 2 plants in Tennessee and Kentucky with a South Korean company that's going to help them do this a little bit faster there. Now, here's the fun part. You look at the numbers, you go, $9 billion, good for you guys. It's $9 billion bucks. They're going to get $7 billion in tax credits, not deductions, credits. They're going to get $7 billion there from the sale of the batteries that they'll produce out of these plants. So you know they want to get this done quickly. So essentially, it's a $2 billion investment on their part. Maybe they go ask the Waltons, you know, for a few bucks there, and they could spot them. But if you take a look at Ford today, obviously that's good news. That's helped fuel this rally here. And they're essentially spending none of their own money to make this happen, thanks to the Inflation Reduction Act, which we're still trying to figure out what that had to do with inflation. I don't know. We'll find out here at some point. Okay, that's one of the stocks in the news today. KB Homes, if you're taking a look over here, these guys have done great. Beats on earnings, everything's good there. Backlogs are strong. Everything is strong for them. The CEO's all over TV today giving the rah-rah speech, the celebration and all that stuff. Good job. I don't know what else to say there. NRG now buying back. The buybacks haven't stopped, by the way. They're supposed to be paying a 1% surcharge to the government. The government's not really reporting this, so we can't really track it too much. They're buying back about 30% of their entire company there. A total of $2.7 billion, which is about 30% of what they are worth, and that is why you see the stock higher today. That typically does it. Speaking of buybacks, Logitech buying $1 billion back over the next 3 years. They got the cash. because over COVID, what we do, we bought the webcams, the keyboards with all the little mouses and devices that they sell to go work at home, right? They got the cash, so they said, well, let's just buy back our shares there, right? All right, lastly, I want to talk about Spirit Aerosystems. They're in the news there because they're on strike. This is not a very big deal. This is one, unfortunately, they're going to get you on this if you follow the headlines. They make the 737 MAX fuselage, and they have a ton of them sitting around in the parking lots. That's an oversimplified way to say that. Also, the strike only is about 1/3 of their entire workforce. They've already planned for this. And I should mention that they've already come up with the deal there. The union contract team has already agreed to a deal in principle. So this is a very minor and short-term thing. The stock falling today is a little bit of an overreaction there. They've already said that the finished fuselages can be delivered, and that will help fill any void. So there won't be much downtime at all. So today was pretty much an overreaction, which came from, unfortunately, people reading the headlines and going, oh, Spirit Aerosystems, they make the 737 MAX. That's going to hurt Boeing. Oh, no, sell Boeing. You might regret that one. We'll see how that plays out. And then lastly here, Jazz After Dark tonight, talking about playing offense and defense with your investing. Just trying to boil it down to two simple things there. What does it mean to play offense, and what can you do? When do you play defense, and how do you do it? So we're going to go through that tonight on Jazz After Dark. If you're not a client, it's free. You're welcome to check it out on our channel here. If you are a client, we'll see you for Wine and Wealth. We're going to talk about the sort of the geeky side of the IRA deductions, make it really stupid simple for you so everybody knows where they stand on that one. Hope you'll join us for that. And then tomorrow, me and Eric will be talking about the student loan payments on our sort of podcasty thing that we do. And we were playing with the lights. So we're trying to make it look a little bit more like, ooh, that's cool. So we're interested to see what you guys think. We're going dark mode tomorrow. So check that one out. And I appreciate all of you guys following us, giving us a chance to be in your ear this time of day. Hopefully you learned something there and I keep you out of trouble. If you're a client and you want to know more about that digital dollar that is literally days away from taking over, supposedly, we did a deep dive on that to go over the rules and how it's going to work, all the legislation, and how they're going to implement this thing. So if you want to know the non-biased approach to that, you can take a look there. If you're not a client of Jazz Wealth, I hope you'll keep us in mind. JazzWealth.com. Transfer your IRA, roll over 401k, leave your existing advisor, come over here with the cool guys, and appreciate the opportunity. All right, enjoy your evening. We'll see you later. Adios.